Once again, I'm Ken Kibler, Director of Training and Client Business Support for eTruckBiz. I want to thank everybody for joining us today as cover the weekly update where we're going to discuss some of our normal topics as well as the surge in the FedEx stock price. As always, if you have any questions, please put them in the chat or in the Q&A so we can get those at the end of the session. Without further ado, I'll turn it over to Joe.
As always, we need to remind you that eTruckBiz is not endorsed, sponsored, or anything like that by FedEx Corporation. Today, before we get started, we want to hear about an offer that Becca has for us.
Thank you. As you're going to hear throughout this call is how FedEx stock is at an all-time high. This is reflecting the strong performance of the brand overall. However, the reality for FedEx contractors is quite different. Despite good fortune for FedEx, it seems your margins have never been thinner. So you're working harder than ever, but the numbers just aren't adding up like they used to, which this will give us the dichotomy between the brand's financial success and the challenges faced by contractors on the ground is the focus of today's business update. I didn't know that you were independent contractors. I didn't know that you had to negotiate a contract and hire your own employees and just everything that goes into running a FedEx operation in general. So I was very interested in learning and finding out as much as I could about these business. And then one thing that stood out to me was learning that even though most service providers earn substantial revenue, keeping an acceptable amount of it was way harder than it seems it should be. I eventually switched positions and was given the opportunity to start working in sales. Having that, of course, I'm in constant contact with service providers all the time now. I got to know firsthand the difficulties that you're experiencing and why it seems as difficult as it is. Most of our eTruckBiz employees, they have over 35 years experience in this industry. And so I learned a lot from them as well. We understand the challenges you're facing, especially since I've been able to talk to service providers all the time. I really do understand what it does seem difficult and very complex. This current squeeze is unprecedented, and we know the frustration of doing everything right and then still feel like you're running in place. So we want to help. There needs to be a way to turn some of your expenses into an investment in your business that builds value instead of just driving up your costs. Now, there is a way to do this with the eTruckBiz Business Growth and Support System, which is going to enable a more effective and efficient use of your resources to handle the non-revenue producing activities so that you can focus on your time on revenue producing ones. And that's going to be a huge help. You don't need to build all of your own business support functions because you can now just use the all-in-one with us, standardized, and it will be cheaper than what it would cost to build your own anyway, with our experience and our expertise and knowing how to go about certain situations. So the result is you would spend less of your time getting better results than you may have experienced before. Things will start changing once this is going into place. People will start asking you for advice, knowing that you have a handle on things and your operation is running as smooth as ever. Some of our clients are getting tired of being asked the questions, how are you doing it? What are you using? And so forth. But it really is a game changer by using our programs. So our goal is to get you what you want out of your business and what you signed up to be a contractor for in the first place. This was a relatively easy business to manage, but you also have the amount of freedom and that level of freedom that you would like. They also want a significant income, of course, then a business asset that grows in value. So we could definitely help with this as well. A big part of this solution is going to be the BGSS ecosystem. This is really what the BGSS was created for. And it's not just another piece of software. This is actually teams and experts in this area that are helping you to make the changes necessary, focusing on different areas of your business. We have helped many people thus far just by admin IQ, budget IQ, and performance IQ. You will get all the necessary tools, goals, everything that takes place in this. So if you are interested in learning more about the business growth and support system, you can always email me, becca@etruckbiz.com. You can scan the QR code right here and schedule a free BGSS information session. It really just comes down to us seeing this happen so many times where you're just bogged down. There are so many things that you have to focus on, and we want to take away that stress and carry that burden for you and let our professionals take care of it while you focus on areas that truly matter and making a difference.
All right. Excellent.
Thank you.
So, as we always do, We want to look at the volume from last week. Now, you'd think that the volume was going to take a really big turn up, but if you start looking at some of the graphs and numbers here, yeah, we came back, of course, from the snow crisis, from the cold crisis, but it's the volume, at least on the pickup side, was still pretty far off of where we were at this time last year. So you look at the delivery side, same thing. A 30% move up is good. 33% move up is good. But look at that. We're still not at the trend line. So that's not so good. I hope the volume is a little healthier this week. I don't think there's any real bad weather things going on out there, but
Snowmageddon might have run its course, hopefully.
well, let's hope so. Let's keep that away. That's not good for our businesses. Speaking of not good for our businesses, look at the productivity. So the routes dispatched, that's not good. It went up, but there is some good news. The stops per dispatch were way better than they were last year at this time. So that's interesting. All that bad news, volumes down, dispatches up, not good. Somehow we eked out a gain on the stops per dispatch side. That's a good job.
Fantastic. 7% gain week over week, as Jeff said, exceeding last year. So hopefully we're all concentrating on that stops per dispatch number. Hopefully we know our number every day because that's what's going to drive your margins.
So that's good. Actually, it seems like the news is continuing to build this week. There's a lot of things going on. Let's try to step through a few things. First of all, the stock price is very, very strong. And this is from the 9th, which was yesterday. In the past month, up 52 bucks, 16.7% in a month. And if you go back farther, it's even more of a move than that. I don't have a slide for that. Maybe we'll have that up Thursday. So as you may or may not know, FedEx is hosting their investor day on Thursday. And a lot of folks think that something's going to get announced at investor day that has really moved the stock price really high, right? So what can it be? Is it the freight thing? Well, that's not anything. Freight's spinning off if you don't know. That's actually, is that good or bad for the stock price? I don't know, but I don't think it can hurt, but that's been known for quite a long time now. But some folks are saying that there's a very significant rise in earnings per share that's going to be announced. It could be maybe up to $25 a share. Now that for sure would move the stock like it has moved. If that's true, that's huge. That's a very, very strong sign of some good things for FedEx. Another thing that just got announced, I think it was Monday, but somewhere around Monday, is FedEx and a private equity firm named Advent are going to buy something called InPost in a $9.2 billion deal. So a consortium led by FedEx and InPost Investors has agreed to buy out the parcel locker company in a 7.8 billion euro, $9.2 billion deal aimed at expanding InPost's reach across Europe while giving FedEx access to its locker network, the companies said on Monday. So the question there is, okay, what are you doing that for? Okay, I guess that company's profitable, which we'll see here in a second. But is this a sign of things maybe to come over here in the States? Sometimes this happens. You do have FedEx stores and you do have Walgreens and all that kind of stuff, but maybe this is going to be expanded in a much bigger way, which will end up affecting your guys' businesses in a huge way. But they didn't say anything about that, so who knows? Long story short, this acquisition is supposed to be immediately accretive to earnings. If it is, plus they're going to announce a $25, if somewhere in that range, earnings per share. That's why this stock is moving for sure. All right, so what about that huge new stock price? What does it mean to you? So as we said, FedEx stock prices surged to $369. It's somewhere around there. It's at an all-time high, or it's close to it. It's up about 150 to 200 bucks from just a few months ago, right? It appears that Wall Street is now excited about FedEx's One FedEx transformation strategy. And that, folks, is where all the extra earnings are coming from. But the real question is, when does this increased enterprise value start to benefit service providers like you who operate the FedEx network every day? It's important to highlight how the service providers' efforts contribute to the overall success and increased valuation operation of the FedEx business overall. They're taking the packages off the high cost express trucks and they're putting them onto the low cost ground trucks, right? So what's going on? The Drive initiative is unlocking billions in structural savings by removing duplicate costs from the FedEx network. This is more than just a corporate win. It's proof the model you're part of is becoming leaner, smarter, and more profitable. A key part of this is the FedEx Freight spinoff, which will happen on June 1st, and a clear path for a laser-focused package operation. When the enterprise becomes more efficient, the cost to serve drops. In a healthy partnership, those increased margins should create breathing room for service providers to grow their own profitability. You should benefit from this. The efficiency flow has 3 key steps for service providers. Eliminate duplication by consolidating express and ground into a single integrated network. Okay. Increase density. Now it's all about density. Increase density by reducing overlap in delivery routes, leading to more stops per mile. This should mean higher margins for service providers as a result of the density and efficiency increases. Sounds good, right? Increased density should naturally lead to higher profit margins for service providers. So what's assumed is fuel efficiency is improved with less deadhead mileage. Labor can be optimized with more stops per delivery window. Resource utilization increases as vehicles work harder in smaller, more concentrated areas. The Drive initiative has already removed over $4 billion in structural costs, and these savings should be reflected in updated customer contracts, or in your case, contractor contracts. Now, is that what's going on? This is great, but what's in it for service providers? There are some contractor benefit assumptions baked into the increased density argument. Why should you? There's some things that you should understand that Wall Street thinks, not necessarily what we think, you think, but what is Wall Street? Wall Street values stability and reliability in the FedEx contractor base and assumes, that's a big word, assumes that service failures and contingency costs that hurt stock value are going to decrease as contractor density induced margins. They assume profitable service providers can invest in a premium fleet of vehicles and attract the best drivers, which is a competitive advantage. Then, reliable contractor networks allow FedEx to capture more high margin volume from competitors, further driving stock price growth. Contractor success isn't an afterthought. It's a prerequisite for continued financial growth and shareholder value. So they're assuming that this is going to be great for contractors, okay? But it seems that there's a little problem. Outside observers think higher density should lead to higher service margins. The reality is that density doesn't automatically translate to higher profits for contractors. Why is that?
Because some stops take longer than others. And if your density is all on the pickup side, it will affect your stops per hour. And then, of course, your stops per hour will then affect your stops per dispatch. That's where you're going or not, Jeff?
Well, there's a few things here. So first of all, time definite deliveries force drivers off their most efficient travel path.
A little bit different, but a good valid point as well. So yeah.
So there's that. So drivers handling both ground and express cannot use what's termed a straight line delivery method. So on the express side of the house, those drivers would love it if you could go to this stop, go to stop A, then go to stop B, which is right next to stop A, go to stop C, which is right next to stop B. It's easy just to go next door and keep making deliveries, but you can't do that with time definites and all the different service requirements on the express side of the house, right?
Correct.
So another thing is the opportunity. Now, this is real important to understand this. The opportunity cost imposed by breaking route is difficult at best to try to incorporate into an engineering model. What does that mean?
Well, the engineering model is going to be still based on the stops and where the stops are, not the time that the stops have to be completed. So therefore, it's really hard to engineer it by times, by commitment times, I guess I'd say.
But it's the cost of what you otherwise could be doing. But so if you could go to stop A, stop B, stop C, stop D, and just do right, as they call it, straight line, that's the most efficient use of your time. But if you've got to stop, go someplace else, do something else, do whatever, what you could have done during that time and didn't get done represents an opportunity cost. And if you ask, depends on who you ask, but that could be the most difficult engineering concept that's happening right now with, for sure, in the settlement engineering side of things. That might not be being priced in to contract negotiations right now. Maybe they think it is. And if it is, sure, like them, it would be cool for them to show that to contractors. But I don't know. Doesn't seem like it is being factored in or engineered in. And probably most of all, same day on call pickups introduce non-engineered, unscheduled detours and inevitably added miles. So, yes, they have them on the express side of the house already. That's yes. But the answer is to what? What happens usually in most express operations? In the afternoons.
They're done delivering.
Well, what they're doing is there's usually extra trucks put on the road to pick up the same day on call pickups. There are scheduled pickups, but usually you'll get some part-timers and they'll stick a couple of them out there. And something that isn't known, if a stop, I don't say easy, but it's easy to engineer. I got to stop here. I got to stop here. Okay, now I'm going to go to these two places and that's my best travel path and I'm engineered and it should take me that much time. Well, if you're trying to engineer those stops in that fashion, like you do on the ground side for the most part, now you throw something in the middle there. I got to break route and go someplace else. Those stops come in and they're not part of any engineering plan that day at all. So how do you engineer for that situation? The answer is you can't, because you don't know the variables before the,
as well as confirm that they've been assigned to the correct truck as well. If certain operations might be close to where you're located, they're having to have somebody in the office to utilize part of the eTruckBiz system to make sure that the pickups have come in, that they've been assigned to the proper driver, and that the driver has it on their manifest, otherwise known as dispatch IQ. But
there you go. Well, that's coming here very soon, folks. We're going to have a tool to help you with all these things we're trying to tell you here. That's what Ken's telling you. Anyways, the overall result of express mixed with density is unanticipated increased travel miles, and which erode your margins, right? Often leaving you right back to where you started from. So I think if you ask us, we're going to tell you, we think the engineering side of things, on the ground side of things, is learning a lot about what's happening here. The question would be, well, was it anticipated to begin with? Well, I think it should have been, but it appears that they're kind of learning as they right now. What the whole point of the stock price going up and, the assumptions made by Wall Street and the assumptions made by folks, how this is supposed to increase your guys' margins and whatnot. Here's the deal on this. They will protect the brand at any cost. So it seems, to us at least, that they're going to have to start recognizing some of the shortfalls in the engineering model. And some of that is going to have to mean if you're going to provide a premium service, then it's going to cost a little extra money to do so.
It's going to still force you to be diligent in your record keeping, knowing what your efficiency was before, knowing what the impact is of your efficiency, and if there's a cost to you being less efficient. And, we're seeing it in certain operations, and hopefully Final Mile is coming out with SPS to try to get this right. They're only 20% into this project, right?
For now, that might be something else that they're going to, this is just taking a guess. We don't know anything, but maybe they're going to also announce on Thursday, maybe an increase in that implementation schedule. Maybe not, who knows, but it would make a lot of sense if they're making a lot of money from what they're doing. And if I'm an investor, I don't care what your problem is. Let's get some more return on that investment. Increased FedEx share value doesn't automatically flow to your bank account. You have to proactively go out there and get some of it. First, with the Budget IQ program, build a standard budget and expense plan that compare to FedEx's AI projections against your real world data. If you're going to have any success in your negotiations for the most part going forward, especially if you're in 2.0, you're going to have to show them what is happening to your costs as Express gets integrated into your operation, right? That's the only way it's going to be able to happen. Does anybody have any questions?
No questions yet, but as Jeff said, you're going to have to show them, not just scream it, yell it, because they have been wrong in a lot of places. quite frankly, most of the engineering department is still made up of ground people. So as they're learning the express side and the cost impact of not running that straight line delivery. Ground was great at running straight line delivery because they could, and it made it efficient. And then a lot of the engineered standard was based off of straight line deliveries. But what's your cost of breaking off? What's your cost of covering those pickups? And what's your cost of covering the on-call pickups? Just said we've got customers that are allocating a management person to making sure that they are assigned. There's a cost involved. And can you quantify that cost? And you're going to need to know your cost beforehand too, so you got some comparison. The Budget IQ program is the best place to start, in my opinion. So we don't have Bob here to kill some time today, but the negotiations, as Carrie will tell you, the Network 2.0 negotiations are complicated. More and more, they are willing to do renegotiations after a short time period after a Network 2.0 negotiation goes into place. Know your numbers, have your numbers before, after, during, and being able to quantify them is absolutely critical, because if the stock price is going up and Wall Street believes that this is going to be for the long-term success of the contractors, you got to get your success. You're going to have to earn it, and you're going to have to prove what your costs definitely are. So that's all I got, Jeff. Anything else?
No, that stock price is a good indicator. All you got to do is just look at UPS's stock price right now. Where would you rather be right now, right? You're in the right place. We just have to do the best we can, taking advantage of what's going on here.
Excellent. All right. We don't have any more questions. We will be back here next Tuesday. Hopefully the weather stays in good conditions everywhere so the volume can level off and increase and give you the opportunity to increase those stops per dispatch and maximize your profit. If we don't talk to you before next Tuesday, please have a safe and profitable week. Thank you very much.